So, Herman, what is the OPEC Plus reaction function here? How do they balance supply with production cuts, waning demand from China, and market share moving forward?
Yeah, well, this is sort of the challenging picture for OPEC Plus. You've got softening demand growth, prices under pressure, and then you've got, with the current cuts, about 5 to 6 million barrels per day of spare capacity that they're holding offline. And this is, projects that they've spent billions of dollars developing that they're having to now sideline with these production cuts. And it's either sacrifice and produce lower for longer to try and prevent prices from being lower for longer, or it's throw in the towel and say, well, we're going to beat you on volume and take the hit on price. And some of the rumblings that I said out of Saudi Arabia, other OPEC countries, there's a feeling maybe that their patience has run out long enough. They've been cutting since October 2022. Bringing down volumes gradually, and this current tranche of cuts that they're looking to taper, that's been going on for over a year now. So, again, a lot of this may come down to compliance, as I said, Iraq and Kazakhstan. Iraq's overproduction was about 500,000 barrels per day, according to our Platts OPEC survey in August. They brought that down about 200,000 barrels per day in September. So still over quota, but a much better outcome. Exports are falling. Refinery runs are down. Kazakhstan, we know there's going to be major maintenance on its Kashagan field in October, so they're likely to do better once we get the other, once we get our figures in for the October production numbers. So, will that be good enough for Saudi Arabia and the rest of OPEC? Those are going to be some frank discussions that they're going to have ahead of that December 1st meeting, and even earlier as they look to make those decisions on term volumes in early November.
Indeed. And when it comes to OPEC Plus, it's really a question of how far the elastic band is going to stretch, Herman. What do you think all of this means for prices mid to short term? Do you think we have further to fall from here?
Well, if that tapering does happen and they do start lifting those quotas and production does start rising, there could be a situation where we do see an oversupply in 2025. That's certainly what our balance is at S&P Global Commodity Insights. That's what our forecasters are seeing in 2025, that, again, supply growth is going to outpace demand growth. So if you add that OPEC plus supply onto that, that puts some further downward pressure on prices, all things being equal. Of course, we have the geopolitics going on right now, and these attacks going on. Israel, Hezbollah, Iran may be dragged into this. We have the reported pledge by Israel not to attack Iranian oil facilities. We'll see if they hold that pledge. We'll see if they feel the restraint being put on them by the U.S. and other allies in the region to stay away from that and not disrupt energy markets to that extent. That remains an open question. Of course, we have the U.S. election coming up in early November. And there's a lot of attention being paid in the U.S. to what's happening in energy prices. A lot of efforts, a lot of diplomacy behind the scenes to keep that situation from boiling over.